Lesson 4. Individual Retirement Account IRA versus Non-Retirement Brokerage Accounts. Individual Retirement Account, or IRA. Individual retirement accounts, IRAs, are tax advantage savings accounts that people can create to save and invest for the long term. An IRA, like a 401k account provided as a benefit by an employer, is intended to encourage people to save for retirement. Anyone with a source of income can create an IRA and take advantage of the tax advantages that these accounts provide. Understanding IRAs. Anyone with earned income, even those with a 401k plan via their company, can create and contribute to an IRA. The only restriction is the total amount you may contribute to your retirement accounts in a single year while still receiving the tax benefits. When you start an IRA, you have the option of investing in a variety of financial assets, such as equities, bonds, exchange-traded funds, ETFs, and mutual funds. There are also self-directed IRAs that allow investors to make all decisions and provide them access to a greater range of investments, such as real estate and commodities. Only the riskiest investments are prohibited. IRAs come in a variety of forms, including traditional IRAs, Roth IRAs, SEP IRAs, and simple IRAs. Each has its own set of restrictions for eligibility, taxes, and withdrawals. Individual taxpayers can open standard and Roth IRAs, while small company owners and self-employed people can open SEP and simple IRAs. An IRA must be created with a financial institution that has been approved by the Internal Revenue Service to provide these accounts. Banks, brokerage firms, federally insured credit unions, and savings and loan organizations are all options. Because IRAs are intended for retirement savings, there's normally a 10% early withdrawal penalty if you take money out before the age of 59. There are several important exceptions, such as withdrawals for school expenditures and first-time home purchases, among others. If your IRA is a regular account rather than a Roth account, any early withdrawal will be subject to income tax. Non-retirement brokerage accounts. A brokerage account is a type of investment account that allows you to purchase and sell assets, such as stocks, bonds, mutual funds, and exchange-traded funds, or ETFs. A brokerage account can be opened at a variety of regulated brokerage companies, ranging from full-service stockbrokers to low-fee internet bargain brokers. You may move funds into and out of your brokerage account in the same way that you would a bank account, but unlike banks, brokerage accounts provide you access to the stock market and other assets. Because investment income in a brokerage account is taxed as capital gains, brokerage accounts are often referred to as taxable accounts. This is in contrast to retirement accounts, such as IRAs, which have different tax and withdrawal restrictions and may be preferable for retirement savings and investment. Although many individuals believe that brokerage accounts are non-tax favored, there are tax advantages. The brokerage account offers the benefit of reducing long-term capital gains tax. She explained via email, "You must be a long-term investor in order to do so. That implies you must keep your assets for at least a year. This will not only allow you to take advantage of the most advantageous tax rate, but it will also most likely result in higher returns. The tax rate on long-term capital gains varies based on your taxable income and filing status. It is 0%, 15%, or 20%. The key to reaping the benefits of a brokerage account, according to Barros, is to stay invested, ignore the day-to-day stock market noise, and go live your life." How brokerage accounts work. Many brokers allow you to register a brokerage account fast and easily online, and you don't need much money to do so. In fact, many brokerage firms allow you to start an account with no initial investment. Before you can acquire assets, however, you must first fund the account. You can do so by moving funds from your checking or savings account as well as another brokerage account. You own the money and investments in your brokerage account, and you have the option to sell them at any moment. The broker manages your account and works as a go-between for you and the investments you wish to buy. There is no limit to the number of taxable brokerage accounts you may open or the amount of money you can put into them each year. A brokerage account should not have any fees associated with it. Brokerage account versus IRA. Investors are not required to choose between a brokerage account and an IRA. They can have both. Each account serves a distinct goal, employs a different strategy, and produces a different set of outcomes. Having an IRA and a brokerage account allows you to concentrate on both long-term financial goals, such as retirement, and short-term financial goals, such as purchasing a home or a car. According to you, in both circumstances, you are assisting in putting your money to work for you through the possibility of generating a return on your assets as well as staying ahead of inflation. We always recommend investing often, thinking long-term, and maintaining a broad portfolio, regardless of the kind of investment account. These 3 strategies can help you decrease risk and better position yourself to reach your individual financial objectives. Because a taxable brokerage account and an IRA tax-deferred retirement account both have advantages and disadvantages, combining the two may be a fantastic alternative for investors, Anderson adds. When it comes to retirement savings, IRAs may be a better alternative than brokerages due to tax advantages. A taxable brokerage account will not give you the tax deferral or even the tax advantages that an IRA provides, Dunn explains. According to experts, you should start by forming an IRA and then invest in a taxable brokerage account. When you wish to contribute more money than an IRA permits, consider creating a brokerage account. The more money invested, the greater the likelihood of long-term growth. Maintaining this behavior might result in greater cash to live off of as you approach retirement.